to trade with the trend and how to know whether the market is bullish or bearish when you're forex trading. So the first thing, if you're a beginner, is I want to give you guys a big tip. Is I want you guys to zoom all the way out and don't look at the past. Don't look all the way back here. Move to where price is currently at. So move the price all the way to the left of the screen because that's where we're currently at. Now you're going to want to zoom out while looking at the price. So as you can see, you're probably like, okay, so price is bearish, because you would probably take your trend line, right? And you would say, oh, price is going down. And yes, price is going down, and that's how I used to trade. But you guys are probably used to taking entries along that trend line, right? You're probably used to like selling along the trend line, but that's not how we trade in my group, or me as a person. That's not how I trade. So for you guys, I want you guys to go on the 1 hour chart, and instead of draw a trend line, I want you guys to actually do what's called market structure. Okay? And so I want you guys to look at the trend. So what's the trend right now? We know the trend is bearish, but why is it bearish? Because we have lower highs and lower lows. So what I mean by that is our current low is this. Our current high is here. Our previous higher low is here. And our previous higher high is here. And so we have in total 4 pieces of structure that's confirming the trend. Okay? So if we go down here and we look up here, now that we know we're looking to sell, where are we going to sell? Okay, so we're going to sell within what? Within our current trend, within our current market structure. So the current low, like I said, is here, and the current high is here. And so if we're selling, are we selling, where are we selling it within this current high and low? So when you're selling in the market, you want to sell high. Why? Because price is more expensive and price is at a premium level when it's high. When you want to buy something in the market, you want to buy at the dip, which is known as buying at a discount price level, which means that you want to buy low. But for us, since we're selling, we want to find a place between this current black arrow and the current high black arrow to sell. So now that I know we're selling, we're going to take a tool on the trading view called the Box tool just to divide this in half. So we selected the Box tool, and it looks like this on your screen where the arrows is right there on the bottom. It looks like right there where I have the bottom arrow pointing to that blue square. So that's called the Box. So what you want to do is take that tool and drag it from the top where I have my line all the way to the bottom of where my current low is, which is where that bottom black arrow is. And if you noticed, if you look in the middle of the range, if we just erase the black arrows, if we just take away the black arrows, look towards the middle of the green line, the middle part of the range, where the middle green line is. That's called price equilibrium. So here is this middle green line is where price is balanced, is where price will be balanced. So if you're selling something and the trend is bearish, you either want to sell at this green line where price is going to be balanced out, or when price is up here. And most of the time, price will reverse from here and here, because that's all price does, right? The markets, they go up, down, up, down. And what I mean by that is that's the only way the markets move. So if you're selling, the markets go down, up, down, up, down. And if you're buying, the markets go up, down, up, down, up. So we're selling on the down, we're selling on the down, up. And so in order to make money selling, we want to sell at the ups. So we want to sell here and here, where you see the yellow on my screen right now, the yellow arrows. We want to sell high before it goes down, because there's no point of selling when it's already down, because that defeats the purpose of making money, right? So your option is to look for a POI, which is what I call in my group. POI simply just stands for point of interest. And you can write that down. POI stands for point of interest. Areas that we are interested in taking trades in the forex market. So if we go to the 15-minute chart, now we know we're selling. So, like I said before, we can sell at the green line, which is in the middle, or the high line, not the high line, the space up here, not the actual line at the top. So we can only sell in the middle green line or the space up here. And so specifically, what I trade order blocks and I trade gaps. Those are the only two types of setups that I trade in my group. And so what I mean by gaps are sometimes when there's high volatility in the market, well, all the time, the market doesn't have time to balance itself out because a balanced market moves by going down, up, or up, down. That's called a balanced market because there's healthy price action. So the action of price is going up, down, up, down. The action of price is going down, up. That's healthy. That's healthy price action. But unhealthy price action is when there's volatile events that are happening in the real world, such as news events and economic activity. And because of that, the market won't have time to balance itself out, and it'll just go like this. It'll just go, you'll see a large impulse movement going up or a large impulse movement going down, and it may not fill. And so because of that, there is a big giant gap in the market that hasn't been filled, and that's called an imbalance. That means the market's imbalanced. And so if we look at to the point where I was making with the green line, the market came up here on Euro GBG, right? And it came to that green line, and that from that point, the market is now balanced. But the market can either hit that point or it can continue going up to fill in another area. But for me, the reason why I chose that gray box for it to reverse off of is because that is where I noticed the gap. And by the gap, I mean, if you look here, there's healthy price action. So at the top of the range, we have the market going down, right, dramatically right here, and then the market came back up before going back down, and it did it again right here. The market came down, came back up, and it reversed right here. And right here is where it reversed. And so specifically right there where you see the arrow on the screen, if you notice, there is actually a gap right there. So you see how these wicks right here on the screen tap into something? Like you see that wick that the arrow is pointing to, that candle wick? It just tapped into this little area right there before going down. So on the chart, this is called a candle chart. So the candlesticks are the actual black and white rectangles that you see on the screen. And then those little black lines are the wicks, like a real candle. In real life, when you light a candle and you light the wicks are tapping into areas before reversing. The wicks are areas that they reverse from. So right here, where I have this gray box, on the next level, right here, that is a gap. So in between, in that gray box, there is space. And within that space, there have been no wicks in the market to come and fill inefficient price action that has been created by all the news and events in the economy. And so, back here, if we notice, price did come with a wick and tapped into that gray box. And so now we have two things. We can either wait for price to come and break this liquidity line that we have here. So we have some support right here, which in my group we use the support and resistance as take profit areas because the smart money, the people that operate the forex market, that's what they target to take everyone's money. So I target these areas. These are my liquidity areas, and so I can wait for price to break this support or resistance and get in on re-entry on the gap. And if this is still confusing to you guys, you can either binge watch my videos if this is confusing to you guys, and if it's still confusing, I want to help you. And basically, this setup and this strategy have been working. These setups have been working for me since like 2021, and so I know these can work for you. And you can totally, like I said, binge watch my content and my videos. But look, if you want some specific, concise thing to get answers quickly, like a step-by-step concise thing, so you can start implementing these trades and consistently finding forex trades without spending hours watching like my content and shit like that, piecing all this shit together that I'm saying to you right now, then start off with my ebook. Okay, I have an ebook on my Instagram. Start off with that, or you can join my group. And my group is not expensive either. You can join my group. We have a good community with like-minded traders. We all post our screenshots of our trade setup so you can compare your charts to ours so you can trade properly like us. And yeah, guys, start off, if you want to binge watch my content, that's fine. But if you want specific help, get my ebook. All right? But if you found value out of this, subscribe or like. If you're watching this on the reel, do the same thing. I hope this helps, and peace.